This is an engulfing candlestick, and this is exactly how much it's made me today alone. And I can refresh right now my phone. You guys can see I'm refreshing live, and this is how much it's made me by using the engulfing candlestick strategy in under 24 hours. And in this video, I'm going to show you the exact strategy that I use to take this trade and how you can use it for yourself as well. I'm going to explain to you how I did it and how you can use the engulfing candlestick strategy for yourself. So you're probably wondering what the engulfing candlestick is after seeing that. And it's actually very simple. It's exactly what it says in the name. An engulfing candlestick is a candlestick that eats the last two candlesticks. It is one candlestick that engulfs the last previous two candlesticks. This confirms that it is a bullish engulfing candlestick or a bearish engulfing candlestick. Knowing how to properly use this, along with a lot of other stuff that you add to your trading, is more than enough to have an edge in the market and have a precise entry signal, which ultimately is going to take you to make a lot of money in trading. But obviously you got to combine that with a winning risk management strategy. And in this video, I'm going to share to you how you can use this simple but powerful approach to the market so you can make money with it. But before I actually start explaining to you guys the explanation, I want to be very honest with you guys. This is a very simple strategy, but it is so effective that I can't even explain it. Obviously, you have to factor in additions so you have an edge in the market, but you just saw how with that simple entry engulfing candlestick, I was able to make $54,000 in under 24 hours from my phone. So now that you understand that, what is the engulfing candlestick? What is the pattern? What does it consist of? And as you can see right here in this picture, it is a 3 candlestick pattern. It consists of 2 candlesticks headed in one direction, and then you have 1 candlestick headed in the complete other direction. This right here is also known as a morning star formation or a bullish engulfing candlestick. Here you can see how 1 candlestick engulfs the last 2 candlesticks. Without the 1 candlestick in eating or engulfing the last 2 candlesticks, this would not count as a bullish engulfing candlestick, and it would not be a valid entry signal to use as a bullish engulfing candlestick. And now this example right here is basically the same exact thing, but now heading to the downside. You can see 2 candlesticks heading to the upside and then 1 big red candlestick to the downside. This is a bearish engulfing candlestick. As you can see, the 1 red candle has completely engulfed 2 blue candles heading to the upside, indicating that the market now is going to continue to the downside. So now that you understand what an engulfing candlestick consists of, it's actually very simple and they're literally all over the chart. You can see them everywhere on any single time frame once you're looking at the market. But now you're probably wondering, do these candlesticks always mean the same thing? Can you always use them as a reversal pattern at any point in the charts? And the answer is no. You can have a bearish engulfing candlestick in the middle of the chart, and that doesn't mean that price is going to completely reverse at that point. And just because you have a bullish engulfing candlestick in the middle of the price going up doesn't mean that price can completely go against it. This engulfing candlestick has to be used correctly at a strong area of interest, or at a strong supply and demand zone, or at a strong support and resistance. They are all the same thing. At the end of the day, it's a base point where the engulfing candlestick is having a rejection from, whether it's to the upside or whether it's to the downside. This engulfing candlestick is most valid and most powerful once it has a base point to push off of, not just in the middle of the chart that it just happened to pop up. So if you're looking to take advantage of the bullish engulfing candlestick or the bearish engulfing candlestick, make sure that it is at a level of support or level of resistance. If you want to know what a strong level of support and resistance and how to identify those zones, I have a video for you right here that explains it perfectly, in addition with the engulfing candlestick strategy, which is a perfect combo. You need to make sure that you're at a strong support level to use the bullish engulfing to then buy. You need to make sure you're at a strong resistance level, so then you use the bearish engulfing to then sell. So now I'm going to actually show you the same example of this very trade right now that I'm actually up $53,000. This is the exact example of what I'm trying to explain to you guys right now. So you guys can see right here, this is AUD CAD and how I have entered on the 30-minute time frame after this beautiful bullish engulfing candlestick. So this is the classic bullish engulfing candlestick where it has completely eaten the last 2 candlesticks, and now this candlestick has engulfed above the last 2 candlesticks. This right here is a valid bullish engulfing candlestick. This right here is an example of another valid bullish engulfing candlestick, which is known as a morning star formation. This right here, on the other hand, is not a bullish engulfing candlestick, simply because you can see how they took 2 candles to eat the last red candle. That is not the goal. The goal is for one whole entire candle to eat the last 2 candles, as it did here, as it did here. This case over here is also not a bullish engulfing candlestick. Even though it completely ate one, this candlestick right here should have eaten above this point right here. So this is a perfect example of what is a bullish engulfing and what is not a bullish engulfing. So now, how do you take a trade based off of a bullish or bearish engulfing? Very simple. And it goes back to the point how I just mentioned. You need to be at a strong level of support and resistance. The strong level of support and resistance, as you can see right here, is my 4-hour level of supply and demand, support and resistance, area of interest. Again, it's all the same thing. So as you can see here, this is a support or resistance level where price, whenever it's above, it's being held to head to the upside. Whenever it is under, it is pushing price to the downside, as you can see right here. So a valid level of support and resistance is a zone where it has more than 3 touches. This obviously has more than 3 touches. So now, once you find this strong level of support and resistance, I go to the lower time frames, such as the 30-minute, 15-minute, and I'm looking for this bullish engulfing candlestick, along with a lot of other little details. But the main priority is this bullish engulfing candlestick. And as you can see right here, I got this engulfing candlestick at 9:30 in the morning. Placed my entry as soon as that candlestick closed, and I put my stop loss right under the low of the last 2 candlesticks, and I give it some breathing room just in case if it needs to come back and then create some type of wick so price can fluctuate, because obviously the market simply has to breathe. So after I take the trade, next I have to place my take profit. And then this is a trade where I have multiple take profits set up, because you guys know I'm a day trader, intraday trader, swing trader. It really depends on the type of approach that I want to do based off the account, but it's the same exact strategy that I use on every single account. It's just, do I want to hold the trade longer or not? And for this example right here, this is a prime example of an intraday trade that I can turn into potentially a swing trade, simply because my first take profit was this structure level right here on the daily time frame, which was the high of this wick, and on the same time frame that I entered, it's the highest point that it did right here, which is a nice zone, very valid. But looking at the higher time frames, looking for continuation of the market, I noticed that we have a very strong level of support and resistance right here. You can see we have 1, 2, 3 touches, and there's pretty much nothing stopping price to getting to that point right next to it. The last point over here, there's nothing stopping it. As you can see, price hasn't been up here in over 6 months. So now that we're back at this point right here, it's pretty much clear ways for it to hit this structure point right here, and I can stretch my profits from where I am right now all the way to this point, and I can literally double my profits right now, where I'm up exactly $49,000. So if it goes right up to here, I can make anywhere from $75,000 to $80,000 on this trade alone. But don't always fall for this candlestick. This can actually be very misleading at a lot of times, and a lot of traders can get caught in the wrong side of this bullish engulfing or bearish engulfing candlestick. So for example, let's say right here we were looking to enter a trade based off of a bullish engulfing candlestick, and you wanted to take it thinking that it was a valid trade. Sometimes that's not the case, and it actually doesn't go in your favor. For example, this trade right here, as you can see, this is a very valid bullish engulfing candlestick and has actually eaten more than the last 2 candlesticks. It has eaten about 10 of them. So it's eaten a lot of price in just one single candlestick, which is a very strong indication that price should now continue to head to the upside. But guess what you just did? You literally just bought right at a resistance level. As you can see, this is the level of support and resistance that whenever we're above, we're buying, and whenever we're under, we're selling. That is why it's so key to enter the trade at a very key support or resistance level. I can almost guarantee you if this bullish engulfing happened above the zone, so for example like this trade would have had a completely different turnaround, because as of right now you're literally having that bullish engulfing candlestick directly into a resistance level, and you don't want to do that. If you're buying at a bullish engulfing, you want to be above a support level, and if you want to be selling with a bearish engulfing, you want to be under a resistance level. This right here is another example of a random bearish engulfing candlestick that just happens in the middle of the chart, and you should stay away from these because they have no context and they have no business. This right here is a simple bearish engulfing candlestick. It obviously didn't eat completely the last two candles, so that should be your first red flag. And on top of that, it kind of just happened in the middle of the chart. There's no valid level of support and resistance. Obviously there is on the 30-minute, but with the set and forget strategy, we don't use 30-minute areas of interest because they're nowhere near as effective as the time frames that we use with the strategy. So this is another example of what you want to stay away from because it is not valid. It's simply in the middle of the chart with no context. And this engulfing candlestick pattern, I wish I learned at the beginning of my journey. It would have saved me so much time trying to figure out what worked and what didn't. But it's not enough. Once you learn this pattern, you still need to have an actual trading plan to be able to execute that engulfing candlestick with some type of trading plan. With the set and forget strategy, it lets traders make anywhere from $1,000 to $1,500 a week as a beginner set and forget trader. We've been trading for about 6 years in the market, and I have perfected the engulfing candlestick strategy along with the set and forget trading plan, which leads traders to make anywhere from $1,000 to $1,500 a week as a beginner set and forget strategy. And you're probably wondering what does set and forget mean and how does it let people make anywhere from $1,000 to $1,500 a week? Just click the link in the description below. I have a video there for you that explains exactly what the set and forget is and what it consists of. Every single week I get on a call with the students and we identify these same patterns every single week and how you can use the set and forget strategy to your advantage in correlation with the engulfing candlestick confirmation, so you add it with the trading plan. So if you want to know what set and forget is and how I let traders make anywhere from $1,000 to $1,500 a week, click the link in the description below. I have a video there for you that explains everything to perfection, and I appreciate you guys watching this video all the way to the end. I'll see you guys in the next video.